Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm here with Manu Choudhary. He's the CEO of DMA Link and the co-founder of DeFinity. Hi Manu, how are you this week?
Hey Paul, not too bad. How are you doing?
Very good, thank you. So lots to talk about in the crypto space. What's your take on what's going on at the moment?
Yeah, listen, one hell of a move, certainly after last week's video. But yeah, look, a lot of really interesting things happening. Some good, some bad. On the positive, what was interesting is we saw both MicroStrategy, of course, where Michael Saylor is one of the largest shareholders and CEO. He's been very pro Bitcoin, buying the dip last week, and of course, the government of El Salvador also buying the dip in Bitcoin, which is quite interesting. On the slightly less positive, we had quite a few major hacks last week. So the ones you probably know about are Badger DAO. There was a smart contract weakness which was exploited, and they lost about $100 million. And then there was also Bitmart that lost, I think, about $196 million too, when their Ethereum and their BSC hot wallets essentially were compromised. Now, one that you probably didn't hear of was Solana. So Solana basically on the 17th of September, I believe, was subject to a DDoS attack. And essentially it shut down the network, I believe, for about 17, 18 hours.
What is a DDoS attack?
So DDoS is basically a distributed denial of service attack. So what happens is you either have bots or agents that send so many messages to the nodes that it overwhelms them and they shut down. That's exactly what happened. Exactly what happened in September. And it was down for I think about 17, 18 hours or so. And then they got it back up and running and online. They spent a little bit of time and effort and money basically stabilizing the network and had a couple of other things they did to try and give it more robustness. And basically, even though there was quite a profound attack, the network was slowed, but it didn't go offline. So it didn't shut it down.
Brilliant.
So look, I take my hat off to the dev team at the Solana Foundation, who weirdly haven't admitted there was an attack. I don't know why, but there was. Take my hat off to those guys. They've done a great job at making this not only one of the fastest blockchains, but perhaps one of the most robust as well. So that's really positive and certainly impressive work. And then the other thing I was going to mention was quite interesting was essentially Grayscale published a very lengthy paper on the metaverse. So Grayscale, for those of you who don't know, is the largest crypto investment trust in the world. And I think last time I looked, they own just over 3% of the total supply of Bitcoin. So they're huge.
Oh, wow.
They have been very big fans of the metaverse, and they got into things like Decentraland in particular, where they're very, very big fans in 2017. And they essentially put together a whole paper talking about the metaverse, the scope, the scale, just why and how this could be very large. And they've actually set up specific investment funds to back and fund projects in the metaverse. All of them have so far been on Decentraland, but nonetheless, it's a very interesting read. And look, I think it's fascinating what they're saying. I think they're right. I think the metaverse is something that is going to be absolutely huge. Most people don't fully understand it, and I'll be honest, 12, 18 months ago, I was having heated debates with my friends where I believed that essentially DeFi would eat everything, and they believed the metaverse would. And it turns out that I was wrong and they were right. I didn't quite factor in Gary Gensler in the way I should have done, but that was my mistake. So look, I think this is really positive. And again, for those that are not familiar with investment trusts, and if we have Grayscale, who are the biggest in the world, why do we need ETFs? Well, simply because if you want to buy a slice of the investment trust, you have to pay a premium, whereas with an ETF, you pay par, i.e. whatever the market value is. So it's actually a more efficient way of trading.
We're still in early days in both of them, aren't we, in terms of DeFi and the metaverse? So there's plenty of time for one to overtake the other. And also the crypto markets, as with normal markets, tend to move in cycles. So at the moment, DeFi is down and the metaverse is up, but that could easily change and move in rotation. So there's probably a big bull market for DeFi in the future.
I think there's a reasonably big bull market. I think the only thing I would say is that with the metaverse, it is going to be entirely unencumbered by regulation, and it is going to be a truly democratized and free place to scale businesses.
One would hope. We thought things like YouTube would be like that, didn't we? And it didn't end up like that.
Well, they were initially, I suppose. Yeah. But yes, no, agreed, absolutely. So look, I guess okay, fine, within reason, but no, I mean it's really interesting that the Grayscale is so bullish and so positive about the entire thing. So look, I'm I'm a reasonably big fan of the metaverse. I'll be honest, I wish I was a bigger fan 18 months ago, but nonetheless, better late than never.
Yeah, there's a long way to go. Long way to go. I mean, I think despite one of the things about being involved with people who understand this tech, someone like you, is when we talk about this, we feel as though, oh, you may have missed the boat because you weren't there a few years ago. But in terms of the wider audience and people around, if you speak to people on the street, nobody knows about this stuff, and they won't for a very long time. So it's still extremely early. Whichever way you look at it. There's a question I needed to ask you about the Decentraland, and I suppose it applies to other coins in that space. Is it better to buy land in the actual Decentraland? And to be fair, I don't know how you do that. Or is it better to buy the coin? Or how else would you play it? Because they seem to be a separate thing, even though they are connected.
Yeah, no, they are. I think, to be honest, it's always better to own native assets. So if you have land, and I think last time I checked, the cheapest plot of land at Decentraland is about $13,000 now, which is quite a lot. I think it was like $1,000 in 2017. So that I think is probably the best way to buy those assets, and those you can buy those as NFTs. I think the token is worth having. Also, I think it's worth probably having both. Again, I think if you're at the same stage that I am, which was slightly late to the party, I guess, than the people that bought it $1,000, then again, you can still buy much cheaper assets that aren't necessarily land within Decentraland as well. But again, I think maybe having a portion, maybe 50-50 of assets versus the native token is probably worth doing. And I think as things develop and evolve, you're going to have more token utility as well. So I think that will also help to add incremental value. And again, look, let's not forget, if, for instance, Grayscale decide to add to their investment trust, they're going to be buying the token rather than the NFTs, as far as I'm aware.
Interesting stuff. So was there any other news, or should we go to the charts?
No, I think let's go to the markets.
Yeah.
Very, very crazy week, I guess. So.
Yes, absolutely. Yes. So I think the markets seem to wait until we do this show just to then have an absolutely massive move. Right. So starting off with let's look at the equities, because they are still basically in an upward trend, but slightly turning over. So we were looking at this prospect of this support line and whether it will get hit or not. In the S&P, it went down, hit supports, rallied. That was actually the previous sell trigger that we used on this retracement, and the market's consolidating. So there's not a lot to say there. The VIX is still elevated, and you can see it's come off its major level, but it's still elevated. So there's a lot of fear out there as to perhaps where the markets are going to go next. But the European markets are relatively well behaved. They're bouncing from support, but not a lot to write home about in terms of trends. Markets are either sideways, near a high, or consolidating. So I'm going to put that in a neutral camp for now, and we'll just wait until we get a better opportunity. But where there have been some really interesting developments, I don't know if you saw the headline about Evergrande. They did default on the debt, and I look at them every now and again just to see what's going on. Let's just pop that chart in there so you can see that this rebound was still very negative. The market's hit a new low. So technically, I've been thinking this is terrible and it's really not a buy by any measure. And the biggest market that's been affected by that was obviously the Chinese market. But which way do you think it went on that news? It's been going up. I know, that's right. That's how markets tend to work. They are very contrary. So the Chinese market broke a downward trend line, and it broke a really important resistance line. And this is looking slightly more bullish than we've seen in a very long time. Now, it has been languishing for some time, but is this the start of a new trend? We have to really ask ourselves that this is a possibility. Now, the Hong Kong market has been doing terribly, and this is still in a major downward trend, and it's got a lot more work to do. It hasn't even broken its intermediate downward trend line, let alone its long-term downward trend line. So that's still languishing at lows. So there's a bit of discrepancy between those two markets, but it's very interesting to see that the Chinese market has been rallying. Now, it could be that they're picking up really cheap commodities because the commodity markets have been slammed lower, and there have been some great opportunities for long-term buyers to step in. Look at aluminium, that had collapsed over 55%, and it's now moving back up again. looking at the yields. Now, we picked up on the weakness in the 10-year yield last week. I was saying that there's something weird going on, and we actually got the reason for that weirdness. It was that there was a really weak non-farm payrolls number. The 30-year yield had broken support, and it didn't look good, but over the course of the week, it's rallied back up again. And so it's a sell the news, buy the fact, or, buy the news, sell the fact, whichever way round you want to look at it. So the news was bad and yields went down, but then that was an opportunity to basically sell bonds on any bounce. So we're back in this range for 10-year yields, and the dollar is still doing extremely well. So that is, I'm going to have to say, a bit of a downside for crypto, even though sometimes the relationship kicks in or not. I think either way, it's not a positive for crypto if the dollar's strong. And the dollar is still strong, and it does look like it's going to break into a new high. We've got a little correction going on here, which looks very triangular. And that's usually a pause in a trend before the market pushes up again. So we could be seeing another surge in the dollar, which isn't the best sign for crypto, but I'll be very interested to see how it trades given this scenario. Now, if we look at the spread between Ethereum and Bitcoin, that's still moving in the expected direction. I think this will trade at 0.01. But yeah, so this is still going up, basically. So Ethereum will outperform Bitcoin. And if we look at the actual Bitcoin chart from last week, we were waiting for a trigger before going long. And that trigger, if I just move it to a daily chart, you see that trigger was this yellow line, this yellow resistance line, because that's now the downward trend. So at the start of the downward trend, we wanted it to break in order to show that the market had enough strength to move towards the high. It never triggered. And what did trigger was the break of this very important 54,000 level, which you've heard me talk about many times. So it's not surprising that stops got hit on a break of that. There'll be all sorts of bots, all sorts of stops. It hit it once, which makes it even worse because, of course, that then becomes a buying opportunity on the second hit. So it spikes all the way down and hit 42,000, as it were. That the next major level is 39,576. If it takes that out, I think it's going to go all the way down to 30,000. But we've seen a bounce, so the question is where now? Well, it's still in the doldrums. It's now got this overhead resistance of 54,000 and this downward trend line to break before we can get bullish. Now, that doesn't mean it won't rally. I think it probably will, but it's looking pretty heavy here. So I think being neutral until we get the dust to settle a little bit, especially on the volatility. It's been really volatile. That's not a good environment for anybody. We don't want to see the market swing around, 20% in 3 days. That's not good for any trader, any investor. But this will settle down into what I think is a consolidation, and then there'll be some brilliant buying opportunities as we resume this broader bullish trend. So this trend will kick back in. It's just a question of when. So Ethereum, as we've said before, looks more bullish, but I think this is going into a range now. So in terms of its relative position, it's much higher, which is why we're seeing the spread look more bullish. And I think that will continue. But it seems like Ethereum will most likely go sideways while Bitcoin perhaps retraces and some of the other coins continue to retrace. But the signal for me that this has all changed would be a break of this resistance line, unless we see some form of reversal pattern or a triangular continuation pattern form. If they form, then it will tell us that there's time to buy on a breakout. But for the moment, I think we're sitting in a neutral range. We've seen an extremely volatile week. And when things like that happen, I think it's a really good time just to step back, take stock, and then plan out some levels to buy for the long term in terms of retracements or breakouts. But not to rush into any short-term trading, because literally I don't know where this is going to go from week to week. This could be, all the way back up near 4,600, or it could be all the way back down below, breaking this previous low around 3,600. So when a market's that volatile, I think you do have to step back, and that's what a lot of the players do. So as far as the altcoins, Cardano hit a really nice trend line. So we were watching this trend line. I mentioned it in our weekly document, but I said we'd talk about it here on the video. It actually touched it almost bang on. So this is a really nice trend line that's held all the retracements. Now, I've got to be honest, it still does look a bit heavy here. So it's looking like it's coming back for another test. But this has been leading the way down, and trend lines are there to be bought against with stops below. So I would think that this is a good area of interest. It's already shown to be a short-term area of interest. There's been a lot of bearish news around Cardano, and what I like to see is that bearish news come out, and then the market sort of weak hands sell, and then it settles down and we move into a new upward trend. So that would fit the psychology if it stops here. As far as the other markets, we've got DOT here, which is still in this downward trend, still looking heavy. We've got the same resistance line that it needs to break before we get bullish. But I think long term, nothing's changed here. Nothing's changed. It's just it's in a bigger retracement. There will be some buy levels, but for the moment, it's still looking pretty heavy, and we're not going to touch it until it looks like it's punched its way out. All the bears have sold, and it's time to turn. Now, you mentioned Solana. The price action's done extremely well, given the information you've just told us, Manu. So that's really interesting to know. But I have to say, this is looking heavy, and it's looking like it wants to break this support level. It keeps bouncing on it and pressing down towards it. So it wouldn't surprise me if this 177 area breaks and it goes down towards the 140 before the trend continues. Now, if it can hold this line, I'll be very impressed. I would be very, very impressed if it keeps going sideways into next week, which is what I prefer to happen. But it does look like the pressure is on, and it will trade some lower levels. Now, the final chart we're going to look at is one that I liked from last week, and it was starting to break out and got slapped back by the big wave of selling and everything. And that's MATIC. But given, or Polygon as it's called now, given the amount of selling, it's actually done okay. It hit its lower support line, it's moved back up again, and it's trading towards, or trying to trade towards, its previous high. So I like the technicals on that. I think if it doesn't manage to move into a smooth upward trend, the second most likely strategy is that it will just go sideways and we'll see a bigger consolidation. But if you compare that chart to Cardano, you can see technically on a relative basis, it's doing much better. And I tend to prefer markets that are doing much better, even though I accept that Cardano is close to really interesting support. So I like this. I think this is one that I'm keeping a very close eye on, and I would like to see this buck the trend and take this high out, which I think is really possible. So when the markets are broadly being sold off, you look to see which ones manage to survive that wave of selling and still do pretty well. And this sort of fits the bill. So there's a couple of reasons why I still like it. But we shall see. We'll let the price action tell us where it wants to go next. But it's still a very interesting market. I think, as you mentioned last week, Manu, the chances of a Santa rally do seem to have diminished quite a lot. I mean, you never say never in crypto, but the way the technicals are looking, I think we're probably going to have to accept that will be next year. Any final thoughts from you, Manu?
So, just in terms of a couple of things I said about geopolitical risk last week, I was, to be fair, slightly half joking about half the things I said. But what's quite troubling is that here we are, another week has passed, and it looks as though some of these things are unfortunately coming true. So it does look as though China seems to be sending quite a few of their naval vessels into the vicinity of Taiwan for obviously military exercises of some description.
Yeah.
So that may be a euphemism for invasion, who knows? But one of the largest chip manufacturers in Taiwan actually frantically announced that they were going to essentially build a new facility in Arizona, which is very interesting. So I'm guessing they're slightly concerned about what's going on. And then again, the comments I made about Russia, lo and behold, this week there's 120,000 Russian troops moving towards the Ukrainian border, which is not good. So yeah, it's troubling because I think some of the responses I've seen from a couple of senators whose names escape me have been pretty insane, suggesting that the US should launch a preemptive nuclear attack against Russia.
Don't be silly. No way.
What these people are smoking is beyond me. It's absolute insanity. So let's think about the logic here. I want to give freedom to Ukraine and democracy to Ukraine. And so what I'm going to do is start World War III and destroy the world. Well, that doesn't make any sense. So it's slightly nuts. I don't think that's going to happen. Again, look, let's not forget, Putin's a very smart guy. And I'm pretty sure if he's keen to do something that's going to cause chaos, but actually not start a war, then again, he's probably going to shut off the gas to Europe, which is what I suspect he's going to do in January of next year. He's
got one button, hasn't he? And that's what he does. He just uses that one button.
That is the one.
Yeah.
That is the one. And what is everyone in Europe going to do? Well, probably remove the sanctions, I guess.
Yeah, I mean, it's really interesting that what they're trying to do, what the Americans are trying to do to kind of weaken Russians' position with regard to gas, is to ship liquefied natural gas across the shipping routes to Europe, because they're an exporter of natural gas, and if they can do
Yeah.
that, then they can basically have more, support the countries that support NATO, and also weaken the Russians' position. So I think this is a game between the two countries as to who can help, inverted commas, Europe the best. So it may work very much against Russia if they have the opportunity to turn off the gas, and they do, because it would just force the European countries more into the arms of the Americans and their liquefied natural gas.
Yeah, look, I think there's a very strong chance that is probably what's going to happen. But let's not forget, in terms of capacity, the capacity for liquefied nat gas is a fraction of what's going through the pipeline. And also, let's not forget what's happened to the cost of freight and shipping.
Absolutely.
So I think you're right. I think it probably will be a bit of a stopgap. I don't necessarily think it's going to change the landscape. And look, let's be honest. I could be wrong about this. I hope this doesn't actually happen, because it's not going to be great news, I think, for the markets or anyone. But I would prefer this than a full-on war. That's never a good thing.
Yes, absolutely. The one final comment is, I did actually include, after your comment, the Taiwanese stock market in the weekly document, because the chart looks really interesting. And this is where technical analysis is why I like using technical analysis, because it's actually at odds with what's going on in the fundamentals. It looks like the market's going to break up. Now, obviously, all can change. So there's, all caveats of risk that if something does happen, if there is an international event, of course, the market could dump out of a blue sky. But the actual chart looks really positive. So it wouldn't surprise me to see it squeeze up higher against all expectations, because that's normally what happens. The technicals don't necessarily follow the fundamentals, and the best opportunities are those that don't follow the fundamentals. But we shall see. Really interesting stuff, Manu. Thank you for your comments. Thank you for your insight. And thank you so much for listening, and we will catch you next time.